Right guys, so let's now have a look at the gross profit margin. So within this paper we've got the statement of comprehensive income here for this pet boutique firm, and it's just asking us to do this nice straightforward calculation question. So have a go at that now and pause the video. Right, so let's now run through this. So of course, to work out our gross profit margin, we've got to do gross profit divided by our sales revenue, and we've got those figures right here, of course. So let's put that through. And then you multiply through by 100. So the figures that we get out of this, of course, then translate to 22,512, and that gets divided by 31,200. We then multiply through by 100, and as we do so, well, we get a 72% gross profit margin, okay, which is very healthy margin that this business is making on the revenue minus the cost of sales or cost of goods sold. Let's now move it on to our liquid capital ratio. So to that one, of course, we need to use the statement of financial position. So we can just see that here. So again, pause the video if you want to have a go at this right now. So when it comes to this, of course, this is a more severe test of liquidity to make sure that the business can actually afford to cover its day-to-day debts. So we've got our inventory. That is, of course, the least liquid current asset that the business actually has. That's why it's at the top. Cash, meanwhile, is of course the most liquid. That's why it's at the bottom there. So what we've then got to do is take our current assets minus the inventory and then divide that by our current liabilities position. So let's then do this. So we've got a total current assets position 7,796 minus the 2,496, which we then divide by 5,824. Now this then translates to a 0.91 to 1 ratio. That is between these more liquid current assets and the current liabilities position. Okay, so they've got 91p to cover every £1 of current liabilities. Okay, so that's 91p of current liquid assets. Okay, so that is without selling any stock. Great stuff.